Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. Thank you for tuning in to our podcast entitled The Secret War on Cash, where we take a look at some of the changing dynamics that are going on around us in our marketplace, our economy. And there's certainly been a lot of that. The last couple of years in particular there's been no shortage of volatility. There's been no shortage of changes, developments, some good, some bad. As we've been discussing this, I have my co-host with us here today, Chris Agelastos. Chris, thanks for joining us. How are you?
I'm doing well, thank you. Gearing up for the summer.
Well, I hope you're excited. When I saw this article, I couldn't wait to talk about this on our podcast. So I'm going to get right into it. It's a few days old at this point, but the title of it, $27,000 an ounce gold.
Yeah.
$27,000 an ounce. Now, gold, as we're recording here today, is roughly speaking 24 and change, actually, in the upward ends of $2,400. 27,000, Chris, it seems like a lot, but mathematically, it's over tenfold greater than where it sits today. And we've talked about numerous times on this podcast about gold prices. When we've talked about it, I should qualify this by saying, we've quoted Bloomberg, CBS Market Watch, MSNBC, CNBC, all the news and business networks, where there have been oodles of analysts or forecasters out there talking about gold prices this year hitting as much as $3,000 an ounce. Now, when we started talking about that, gold was trading at a little less than $2,000 an ounce. I think when we first started, probably about $1,800, $1,850 or so.
Mm-hmm.
So we've already had roughly a $600 increase per ounce to get to the levels we're at today. 3,000 would be fantastic, but $27,000. Tell us why this could happen, Chris, or can it happen? Is this just one of those things where this is an article by James Rickards? Has he just been drinking a little too much, or is he just being a little too overly optimistic? I mean, what in the world is going to happen? What will happen to cause what needs to happen to cause gold prices to do this?
Well, he does a good job of laying it all out here, and I know it does sound crazy to some extent, right? But at the same time, 30 years ago when my father bought his home here in Phoenix for $29,000, he didn't ever think it'd be worth $1.5 million, like it is today, right? And so the devaluation of the dollar has happened over that time period, and a dollar just isn't as impressive as it was, and that's how we can see these high numbers. But Rickards, even more specifically, lays it all out here, and what he's really going by is the belief that the central banking system is going to have to back the dollar, at least partially, with gold, like we were years past. And his thought on that is, we've seen such a high devaluation, high inflation over the last several years. People are starting to lose some of their faith in the dollar and our government and other governments' ability to handle and manage their own currencies properly. So he believes that people are going to demand some sort of accountability, and he points out with the math that even if the dollar, as it's currently stands, what we currently have in circulation, if it was only 40% backed by gold, so not fully backed, but 40% of our currency was backed by gold, gold would need to be in that $28,000 range per ounce. And he goes even further to say, well, let's say it's only backed 20% by gold. Even that would command a $12,000 to $13,000, per ounce price. And then when you get into the other variables that we've talked about, less mine output, which is giving us really solid support levels at these numbers, and that over time, the way percentages work, every $1,000 of growth in gold is a lower and lower percentage of growth. It's easier to achieve. So, for example, 20 years ago when we were seeing gold at $250, $350 an ounce, for it to grow to $1,000 was a threefold increase.
Right.
Well, for gold to go from 2,000 to 3,000 is only a 50% increase. So as these numbers get bigger, the doubling gets bigger, and it's much easier to achieve. So yes, it does sound a little crazy today, but when you look at the facts and the numbers behind it, it's perfectly reasonable to see that we will get there. Now, is it going to be
Sure.
next year, the following year? Like he's saying it could be, maybe, maybe not. What if it takes 5 years? Either way, that's the direction we're headed.
Well, and you hit on a couple really interesting, I think, very important things there. How Rickards mentions that with the 40% backing, and even if you back that off to 20%, but that's just looking at the moves made in the market in buying metal
Mm-hmm.
by the central banks. Kind of some of the X factors that will start to take place as the central bank, if and when they start to do that and start taking those type of positions. What you can't really totally estimate at this point is what will investors, people like you and I, or people tuning into this
Mm-hmm.
podcast, as they start to see those moves, how many of those people are going to start, how many of us, I should say, are going to start
Right.
flooding into the marketplace? Because he's just really, as you mentioned, looking at, with the central bank's activity,
Mm-hmm.
not really acknowledging per se what the rest of the world is going to be doing. And yet,
Right.
the other thing, Chris, and I think is a very, very good point you bring up, is many of us are familiar with what has happened with property values and real estate over the
Mm-hmm.
course of our lifetimes, let's call it. As you mentioned, a $29,000 home purchase that is now
Yep.
worth $1.5 million. And that's not, I mean, yes, it is over the course of time, but you're talking merely what, 3 decades, three and change. So it's
Yeah.
not like 100 years or something like
Right.
that. And,
Right.
and I had a conversation with somebody a few days ago where we were talking about even look at the equities market, the stock market. When I was first starting off in the investment banking world, this is back at a time when Big Blue, IBM,
Mm-hmm.
hitting a share price of $100 a share was a very big deal. And when the stock started getting to that level, it's like, okay, they got to split because this is just
Yeah.
getting to be too expensive. Now you've got share prices that are in the thousands of dollars. And we're not
Yep.
talking about Berkshire Hathaway. I mean, we're talking about
Right.
everyday type companies. And
Yeah.
by the same token as well, the Dow, it was a huge deal when the Dow was going to hit 10,000 points.
Yeah.
Now we're well over, not even that many years removed, well over 30,000 points.
Yeah.
So when you put it in perspective of that, and start looking at, again, a $2,400 an ounce gold today, and you start hearing figures like 15,000 per ounce gold, or 27,000, as much as that seems like a crazy forecast, it really
Mm-hmm.
only kind of falls in or fits in stride with what we've seen in all the other markets out there. So, well, the second article then, let's just to bring things back to near-term reality.
Mm-hmm.
This next article talks about how gold and copper, gold, copper is hitting records. Silver is nearing a 12-year high as the metals rally continued. Metals, it would seem, the growth and this pattern of growth, albeit as we've talked about, due to industrial reasons or investment reasons,
Mm-hmm.
this growth is becoming contagious. So tell us what this article is getting into here, Chris. Like, why are we seeing metals perform the way they are at this time?
Well, again, really strong demand for both gold and silver. I mean, they talk about copper here as well, but all manufacturing reasons, in addition to the central bank things that we were just talking about. And what I like about this too is, this is an analyst for B of A, and as you know, the banks and their analysts don't traditionally love all over precious metals because, let's be honest, they can make a lot more money selling stocks and funds and those types of investments. So they tend to steer everybody that way. But when a bank analyst comes out and says there's strong demand, get in now and hold. That's when you really want to listen. And the thing I like to point out here too, because it is always it's hard to pick and to time the market, right? I mean, we've learned that with stocks over the years. The strategy here with precious metals that has worked very well for me is just simply buying when I have the money to buy and holding it long term. Have I seen little ups and downs? along the way, yes. But if I'm buying and holding for a 5, 10, 15, 20-year hold, it's probably, in my opinion anyway, one of the safest investments that you can have, because over that time period, it can almost do nothing but go up long term, and then you don't have to stress about it on the day to day, like I know a lot of people do. Logging in and checking their accounts in the stock market every day. Did I make money? Did I lose money? If you're buying your metal for the right reasons, as a hedge and for a long term protection for yourself and something to leave to your family, it's very easy and relaxing to invest in, and not stress day to day, like I think many do with their 401ks in the market.
Sure. Well, it's so interesting too, because obviously with any of us, we can learn from history. We can read about history. Much of what we know is based on experience, and our experience is what we've lived it throughout the course of our lifetime. But when you look at gold was currency in this country less than 100 years ago. Less than 100 years ago, an ounce of gold was worth $20 less than 100 years ago. It had a blackout period where once the government seized control, or what people would say confiscated gold, from 33 until the 70s. You couldn't own it. In the 70s, they allowed us to own it once again. And then, we saw gold just sitting down once it was made legal for, basically a decade or two in the, $200-300 price range, short of, the big run up during the Carter administration. But since then, since starting really in the early 2000s, gold has been on a very steady climb, and it's becoming more mainstream. And now, again, with, as you mentioned, central banks getting involved with it, the alliance of BRICS getting involved with it, and then now the various industrial uses, and now investors getting even that much more immersed into this marketplace. It has all the perfect ingredients for not just a safe haven, which is really what we advocate people getting into the market for, but also as one of the top performing investment or asset classes out there. So again, the metals prices, I do believe there are going to be some very, very interesting days, weeks, and months ahead of us throughout the rest of this year. We will continue to follow this. And if you'd like to hear more about this, if you have not already, subscribe to this podcast. Feel free to contact our office. You can see that on your screen if you're watching, or it's in the contact information will all be at our website, and our phone number are on the links if you're just tuning in. We would definitely love to hear from you if you have any comments, and follow us on social media as well, as we've got a lot of good information that we're looking to put out there at the same time. So thanks, Chris. We will talk to you again soon. And gold and silver, keep your eyes peeled, because I think they're getting ready to go.
Yep. Take care.